Welcome to the world of Forex, short for foreign exchange. Forex is the global marketplace where currencies are traded. Every time you travel abroad and exchange your money for another currency, you're participating in the Forex market. But online Forex trading is more than that. It's a 24-hour, decentralized market where traders from all around the world buy and sell currencies, like the US dollar, euro, Japanese yen, and more, in hopes of making a profit. In Forex, what you're trading is currency pairs. Each pair consists of two currencies. For example, euro to US dollar, euro against the US dollar. Pound sterling to Japanese yen, British pound against the Japanese yen. When you trade a currency pair, you're buying one currency and selling another at the same time. If you think the euro will rise against the dollar, you buy euro to US dollar. If you think the euro will fall, you sell euro to US dollar. Simple, right? Now, how do you actually trade Forex? A Forex broker gives you access to the market. There are many trusted brokers, like IC Markets, Exness, or Deriv. Make sure to choose a regulated one. Let's break it down into steps. Most brokers use MetaTrader 4, MT4, or MetaTrader 5, MT5. This is where you analyze the market and place trades. To trade Forex confidently, you need to understand a few key terms. Don't worry, I'll explain them in a simple way. Click on the subscribe icon, subscribe to this YouTube channel. Turn on notifications so you will stay updated on our latest video. 1. PIP, point in percentage. What it is. A PIP is the smallest price movement a currency pair can make. Think of it as a step in price. For most currency pairs, 1 pip equals 0.0001, that's the fourth decimal place. For example, if euro to US dollar moves from 1.1000 to 1.1001, that's a movement of 1 pip. Why it matters? It's how we measure profit or loss. The more pips you gain, the more money you can make or lose. 2. Lot trade size. What it is. A lot refers to how much of a currency you're trading. There are 3 common lot sizes. Standard lot equals 100,000 units. Mini lot equals 10,000 units. Micro lot equals 1,000 units. Don't let the big numbers scare you. With leverage, we'll explain next, you can trade large amounts with small money. Example. If you buy 1 micro lot of euro to US dollar, you're buying 1,000 euros against the USD. 3. Leverage. What it is. Leverage allows you to control a large trade with a small amount of money. It's like borrowing money from your broker to increase your buying power. Example. If your leverage is 1:100, and you have $100, you can control a trade worth $10,000. Be careful. Leverage helps you make bigger profits, but it can also lead to bigger losses. Use it wisely. 4. Spread. What it is. The spread is the difference between the buy price ask and the sell price bid of a currency pair. It's how brokers make money instead of charging a separate fee. Example. If euro to US dollar is quoted as buy at 1.1010, sell at 1.1008. The spread is 2 pips. 1.1010 to 1.1008 equals 0.0002. You are not done yet. Watch next video posted on this channel to upgrade your Forex knowledge. Bye for now.